Hello, it's me again, Ron, and I'm here with you today for this video. And this presentation is Stock Market for Beginners in 2022, step by step. Alright, well, let's get into this and let's do a little bit of housekeeping to start with. I want to say this. Any stock market, anytime you're investing your money, it is very risky regardless of what you're doing. So never bet the house, guys. Never bet the farm on it. Alright, with that said, we're going to move on and we're going to talk about this video has some key elements and information in it that you really going to need to know before you get onto any platform, including Robinhood. But this is going to help you understand and read the information on Robinhood and other platforms. And this video will be a demonstration on how to invest using Robinhood and what to invest in, that kind of thing, and how to find these stocks. Understand this. If you go to the description box down below, you're going to find a link to Robinhood. They do give out a free stock, and when they give you the free stock, the stock from me is just stocks that I have picked out for my students. So when you go through that link, you'll get a special stock from Robinhood that's picked out by me. All right, let's get started. Why should you invest in the stock market? First, the stock market is one of the best tools to grow wealth in time in human history. The stock market has, on average, a 10% annual ROI historically. That's a return on investment. 2, savers or losers. This is the battle of inflation, guys. It's assets versus cash. You know, if you have a savings account, you know right now that cash is being devalued dramatically. You're getting less than a 0.5% on your savings account. Assets, on the other hand, they actually go up in value. All right, you are losing purchasing power by not investing, and that's just very simple. I know that's a little over your head right now, but stay with me on these videos and you will understand. 3, never has it been cheaper to invest. Guys, right now the trend is zero trades, zero brokerage fees. It's just awesome to trade right now with most companies. That's the norm. Low expense ratios for solid investments, guys. That's the truth right there. 4, you don't have to be a genius to invest. Guys, there are strategies out there to help you invest, and we're going to go over some with this. Real quick, look over to your right in blue. Look right over here and read that very carefully, even if you have to pause the video. Alright, we're going to move on, and we're going to talk about, I hope you like this artwork, by the way. We're going to talk about what is a stock exactly. A stock is a share of ownership in a company. Think of each share as a piece of pie or pizza. Buying a share gives you equity or ownership in a company, and that's basically it, just laid out simply. Example. All right, share outstanding times share price equals market cap. This is something we're going to talk about really carefully, real quickly in here, but you really need to know what a market cap is. Alright, shares outstanding is 7.56 billion. Share price 21.602. You add the share outstanding times the shares price, and you come up with the market cap. Alright, real quick, right over here. Company X's has 4 shares outstanding. Share price is $1,000. You go $1,000 times 4 equals $4,000, right? Same over here. Company X outstanding, share price, market cap, 1.633 trillion. Do you think that company has some room for growth or not? All right. We're going to move on and we're going to talk about what is a stock exactly? What does it mean to own stock? Well, we're fixing to talk about that. And this is important too, guys. This is some real basic stuff. Okay. What is a stock exactly? We just went over that. We just told you it's a piece of a pizza or a pie that you bought. And they do call stocks equities, by the way. We went over shares outstanding times share price equals market cap, right? Here we go. Here's me helping you up the ladder. All right. We're going to move on and we're going to go, why do companies issue stocks? To fund new projects, to raise money for development, invest growth, pay off debt. Companies do this for a lot of different reasons, but those are the main 4 reasons. All right. Preferred stock versus common stock. Preferred stock, you have no voting rights. Common stock, you have voting rights. But you also are the last to get paid during a liquidation, and you're the last to get paid dividends. So keep that in mind. Guys, most of the stock that you buy on the stock market are going to be common stocks. So keep that in mind. Now, when I say that, we're going to talk about this a little bit later, but when I say that most stocks are common stocks, understand that that's on average, and it's not just a norm. That it's not a given. So you may end up with something a little better. Okay, we're going to move on. And why do companies issue stocks? Well, to fund new projects. Like I said, look at this real carefully over here to the right, and it's right over here. Okay, to raise money for development, to invest in growth and pay off debt, right? Okay. Equity, IPO, right? Offering, public offering. That is like an IPO is like crowdfunding on the internet. So keep that in mind. Alright, you are usually buying common stocks, just like I said. Definition of dividends, a share of profit. It's just basic common sense stuff, right? Okay, we're going to move on, and we're going to go to how are stocks categorized. This is important. You got a large cap company. They're usually around 10 billion. Typically hard to achieve massive growth due to size. Proven track record over time, many years frequently offers dividends. Okay, these are companies like Amazon and Microsoft, guys. Those are large cap companies. You're talking about mid cap companies. That's usually around 10 billion market cap. Not quite a large cap company, but more established track record rather than a small cap. Often targeted for M&A. That's mergers and acquisitions. Guys, these mid-cap companies, they're often liquidated or bought up by the bigger fish. So keep that in mind if you buy these small companies. The mid companies. The small cap companies, they're usually around 300 million to $2 billion market cap. Typically younger companies, and they are seeking aggressive growth, but they're a higher risk and don't usually offer dividends. Now these are very common on all of the stock market platforms that you're going to see on the internet. But guys, keep in mind, these small cap companies, they do offer some massive gains. When they go big really big. Remember when Amazon was a small cap company and they were selling for $11 a share. Remember when Microsoft was selling for $5 and something cents a share. Now it took some time, but they grew, and they grew huge. So just keep in mind that most companies at one time or another were small cap companies. So understand that small cap companies can be like that mangy mutt that you bring home from the Humane Society. That can really turn out to be a wonderful companion and pet. And with that said, we're going to move on to the next step, and this is how are stocks categorized. You're going to look to your right and you're going to see the green Y up at the top of this. This chart is very simple. You've got large, middle, and small. Alright, you're going to look down to the left of the box and you're going to see an X, a green X. You got value, blend, and growth. And we're going to talk about these a little bit further throughout all these videos. So you need to understand that this is a very simple box, and you've probably seen it on your 401k or your retirement plan, pensions, or whatever. And it's a very common graph. It's put out by a bunch of different companies now and used. So keep this in mind, and we're going to move right on along. And we're going to go to how are stocks categorized. Well, you've got your growth stocks, and growth stocks are big potential for growth, outpacing the market. Guys, these are Amazon, Facebook, and Microsoft. Typically low or to no dividends. That's because they're reinvesting into the company. Okay. You got your income stocks. Income stocks are stocks that pay dividends. And remember, we talked about dividends and what the definition was. Regular dividend payments like 3M, Walmart, Verizon, proven track records, business models, they're consistent increases in dividends. These are your income stocks. Then you've got value stocks. Value stocks are companies that have provided to be trading below its fundamentals, and these are typically below the PE ratio or the PB ratio. That's the price to earnings, or the price to book, typically seen as unfavorable by the market. That means that they don't like these stocks because they don't have what they think is it needs to go big. And if you'll look on, as we get into this, we're going to show you, or I'm going to show you, that on all of these platforms they have the bulls and the bears. And the bulls are the people that think that, hey, this stock is going to go huge, it's going to go through the roof, you're going to make millions of dollars on this. If you can just invest $5,000 into this company, you can make a huge difference. Those are the bulls. You got the bears saying, we don't care if you invest $10 million into this. It's not going to ever do anything. As a matter of fact, it's going to go down and it's going to crash. And this company's going to be sold off or eat up by mergers and acquisitions. So keep that in mind. And every single one, if you look at the news on all of your websites, platforms, your stock platforms, they'll have the bulls and the bears. Alright, we're going to move right on along through this, and we're going to hit the end of this video. Now guys, this is a real quick video. We're just trying to get it under 16 to 17 minutes is what we're trying for here. And I want to just give you each one of these little courses. This is information you're going to need to grow your wealth over time. And this is for people that have never invested on any site ever and are looking to invest. And yes, now is the time to invest. If you go by the big boys and what they're doing right now, then you need to pay attention to them, because they're the guys that know what to do and when to do it. And they are investing a lot of money right now, huge amounts. So don't think that they're not. Didn't you ever wonder during Obama and Junior's presidency why and how these people managed to make millions of dollars when there wasn't enough, when most people could barely afford to buy food or pay their rent? Well, this is why. They knew when and what to invest in. So pay attention to them and you're going to grow your wealth. With that said, I hope to see you on the next video, and I hope that you will like, share, and subscribe this video. We're going to make them short, quick, and easy to learn. I hope you like the artwork, by the way. This is all clip art that I put on here to help make it a little bit more entertaining. Understand the math, practice it. Be prepared, because on the next video we're going to go into Robinhood and we're going to buy a stock. You're going to learn how to buy stock. I'm going to teach you some more about acquisitions. We're going to learn a little bit more about stocks and how they're categorized. We're going to learn a little bit more about ratios and book ratios and performances. We're going to learn a little bit more about all the different platforms that are available that you can buy and sell on. But I'm hoping that you will click on the link below and sign up for Robinhood. Know that you are going to have to link a bank account, because you got to be able to get your money in and out of Robinhood. It doesn't cost you anything. There is a third-party security measure to keep in case somebody breaks into Robinhood and they can't get you into your account. They're like a security, an extra security measure that Robinhood has. So with that said, know that your accounts are safe. Now, I hope that you'll go down to the description box. There's a blue link to Robinhood. Click that link and help me out. Make sure you share and subscribe to this, so that hit that bell, so that whenever I release the next video, you get a notification and you come watch it right off the bat. And we're going to buy a stock next time. We're actually going to go in there and buy it, and hopefully you'll be there and with me. Now, if you do go through my link and you get one of my stocks that I picked out for you, I want you to use and look for everything that I taught you. That information is already there. You'll see the market cap that Robinhood's given you. You'll see the shares outstanding, all of that. You'll see all that there. And I want you to pay attention to that, and I want you to learn. Please, please, let me reiterate. You do not need to buy any stock on here until we get a little bit further into this. This is very basic knowledge, so you don't know enough yet to pick and choose stocks. You go in there and buying stocks, you're going to lose money. So just know that. And you can invest as little as $50 in there, or you can invest as much as $100,000 in there. Whatever you have to invest. Just know that I don't want you buying stocks if you're going to follow me. If you're going to follow me with this class, keep it below $100. Don't go over $100 investing. Don't go under $40. So with that said, I'm going to say God bless and have a great day. And remember to go down there and click into that Robinhood, link your account, join, and get your free stock from me and practice it. And I'll see you next time on the next video. Have a great day.